my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil markets. I'll start with Paris rapeseed. Okay, so recently I have pointed out that what is the neckline, currently at 510 even, of a failed April to June head and shoulders top, or even a continuation pattern, was and is very supportive as an uptrend, bar an aberration in mid-June. We've had 5 touches of it so far, if you exclude the island bottom back in mid-June. Meanwhile, on the top side, prices have been capped by the projected 50% Fibonacci line at 548 even on a closing basis until the end of last week. That's when prices poked up over the 50% projected Fibonacci line and the upper trend line, currently at 562.5, or what I suspected might be one, maybe 2 significant patterns I'd highlighted. The first one is a March to date ascending triangle pattern. This one actually includes the island bottom in the pattern within it, and it has the upper trend line as well as the lower trend line, currently 495 3/4. The second pattern is a more shallowly bullish pattern. It is to look at the neckline again, excluding the island bottom, as a possible lower bull channel line, with the upper bull channel line being the same connected a high as previously mentioned. Now, one would think that both patterns are currently bullish, as the island bottom dealt a severe blow to any bearish incentive. However, whilst I'm mindful that the medium moving average, currently 515 1/4, is rising at a rapid rate, and soon we may well have the long moving average, currently 468, also starting to enter the frame. Yet the key feature in recent days has been the move up over the upper trend line, and this making new all-time highs with a key reversal up this past Tuesday. Yet with all that, we've not had a follow through higher still. It seems that at the very least we may see a pullback to the nearby projected Fibonacci line at 547 3/4. And at the worst, well, this push back upwards this week could be seen as a false break. Not that this doesn't stop any further attempts higher, but unless we see prices turn back up very, very soon, and considering that we had a bearish engulfing pattern on Friday, a big one, a long black Mariposa as well, then we may move back down to either one of the 2 previously highlighted lower trend lines. So watch this space. Winnipeg canola. The move out of the recent ascending expanding wedge pattern has been a bit of a disappointment as to direction. Initially a move lower looked good, but then prices were held up by the 2021 50% Fibonacci line at 818.90. This caused a move back up that resulted in this week's seeming bear spike on Tuesday that was disguised as an indecisive doji cross. The market was capped by the interesting May to date downtrend, currently at 912.20. However, this downtrend wasn't the strongest feature out there. After all, it was until Tuesday only a 2-pointer. Indeed, Tuesday's action of converting into a 3-pointer makes the overhead resistance even more powerful and one to watch. Despite this, this action was not the most important feature of this week. It was Friday's action, not only in itself being a daily key reversal down, but also making the whole week a weekly key reversal down. This leads to all sorts of interesting possibilities going forward. You see, I can immediately see a possibility that the escape from the ascending expanding wedge pattern since July may also have created a possible descending triangle pattern, even a possible double top in the making. I have already pointed out before that below we have some significant congestion between 760 and 822, containing interesting looking moving averages as additional supports, and that we may have another smaller band between 702 and 729, from which the long moving average, currently at 735.40, has just exited. Now, normally if so many closes below the uptrend stroke lower trend line of the ascending wedge pattern, I draw a target X for such a pattern. However, if we are almost automatically going into a second or even a third pattern, then it would seem wise to hold off for now. Yet I feel obliged to place a target X below, just in case. So reluctantly I've placed a target X in the 688.70 area, though I have a nagging feeling that may take some time. First, Malaysia crude palm oil. This is a complex one, aren't they all? The basing action back in June that caused the market to push back up over the long moving average, currently 388.70, the 50% Fibonacci line at 410, and the medium moving average at 441.13, and the short medium moving average at 40.74, ran out of steam shortly, just short of testing the all-time high at 47.69. We had the changeover pullback in early June, dropping down in early August, dropping down below the recent lower bull channel line. This very acute bull channel line, which is currently 48.84, its very acuteness was what suggested to me that its lifespan may be short. Anyway, the market hesitated around the middle time, currently 45.49, and even managed to make a new very recent high, but then failed in a somewhat spectacular fashion, with two daily key reversals down during this past week. The last one on this past Thursday. Now last week I noted there seemed to be, as I said at the time, and I quote, no clear pattern I can easily see either on the upside or the downside. I guess I'll just have to wait and see, end of quote. Well, that seems to be changing as the action this past week is strongly suggestive of a possible double top pattern, even Eve type, over mid-July to date. This was somewhat counteracted by Friday's indecisive spinning top on the neckline of the double top, but it's still there as a new pattern. If that continues to be the case, then we should know this week, well, this coming week, the possible initial target X would be in the 41.50 area, and the full target X1 would be in the 39.50 area. Now, whilst target X is reasonably easy to achieve, target X1 is much harder because it is well below the medium and short medium moving averages, as well as the recent 50% Fibonacci line at 40.10. Then there's one thing I did notice from last time, the potential bow tie formation of three of the moving averages, notably the short moving average, currently 44.75, short medium and the medium moving average. Now before you get too excited, the entry of the three moving averages, as I said last week, were in the wrong order for either a bullish or bearish bow tie. It is just messed up. However, that being said, the crossover is still there. Okay, so in a bow tie formation, three moving averages come together to a single point and then split out, thus looking like a representation of an idealized bow tie when they come in and go out. The next thing is that the bow tie formations see the market move in the direction of the way the moving averages exit the bow tie, ideally. Here it looked and looks like upwards, but things can change very easily. Thirdly is timing. So between 15 to 20 trading sessions after the crossover, the market is due to move in the direction of the indicated moving average or direction of the bow tie, or caused by the bow tie. Though, as I've mentioned here, I personally would settle for the greater volatility to show it works. Anyway, in this case, the crossover happened on the 23rd of July. Therefore, between the 13th and 19th of August, we should see the results of the crossover. I extended it to the 20th of August on the far left to take into account holidays, etc. That is what it looked like, and what ended up was actually a significant move lower during that specific time frame, the 13th to the 20th, thus going against the overall pattern indication, but at the same time showing a direction during that time frame, which was not there before. This is the tinge of doubt that I wanted to bring into the whole idea of a double top. Markets are not simple, and sometimes the patterns fight amongst each other. However, I suspect we are coming to a resolution of the recent sideways action, and soon. Thank you for listening. This short version broadcast gives the weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.